Hi guys, can you hear me? Okay guys, there's only all of you I know, there's 6 of us. So what I'll do, I'll share the outlook. The other second part I will not share. All right, because that one is for new people. But because you guys, I know you, I don't even have to share this part. We share a few minutes, never mind. Okay. Um, okay. Friday, you guys, I think know that the dollar ended stronger. Basically, it's because of the Wall Street. All right, Wall Street got hit towards the end. So it broke below the 55-day, moving average, and everybody got scared, and the risk start moving up. So of course, when it's a risky situation, um, they get very scared. They buy back a bit of the dollars. But I still believe we are not going to see what you call that, a move in the dollar yet. Okay, give me a sec, guys. Hold on. Okay, so I still believe the dollar will probably continue to be a bit weak. Okay. Oh, 55-day, that one is the like a support like that, moving average, and when it breaks, just like I think you know, David, when it breaks 55-day, when it breaks 100-day, when it breaks 200-day down, then it will show weakness. Okay, that's got 55-day, it's like a moving average. Okay, so it's broken down to 55-day. 55-day is not very significant, that's why I say, but you know how chartists are, you are chartist yourself, so you know. So whenever it breaks certain point, everybody kanchong, they want to sell. But I think it's just a Friday. Everybody wants to go home, so they think break. They just want to square off, go home. Then Monday they start. Okay, now the reason why I say the dollar will probably resume down, and also the last 1-2 days, if you all have watched the market, I think Dominic is very, very close to the market. You hear all these so-called Fed hawks, okay? The hawks have been talking a lot the last 2 to 3 days. All of them say, we'll taper end of the year, blah, 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 all that, all right? So market still have that so-called reflation risk, that tapering risk still have, all right? But of course, that is the market. So if the market has that, and the market buy the dollars up, you make sure that you are on top of the market, so that anything happen, you can just cut. But this is, to me, just a lot of noise by those hawks, because next week the headline CPI, okay, we look at CPI, it's going to slow a little bit. Of course, to slow to 5.3 versus 5.4 is not a lot, right? But the core is also going to be unchanged, all right, 0.3 month to month. But the thing is, because of the low unemployment, right, that came out last week, I believe there is scope for a surprise to the downside. Firstly, because when the unemployment, so-called, don't go down, that means the rate remains, or the jobs remain scarce, so-called. 200 over 1,000 is no joke, okay? That means there's about 500,000 or more that have no jobs. And then now, because the so-called unemployment benefits have all disappeared, so these fellas may not, in the very short term, be able to buy a lot of things, right? Of course, if you ask Zen will tell you, hey, but because now they have no more benefits, but they have to go to work, so therefore the employment situation will be better. It depends, okay? It depends whether the skill sets that they are going to employ is there. If not, you will still have an issue. So because of the low employment situation, used car prices has gone down. Other travel items, people don't travel as much because of loss of confidence. The consumer sentiment has also slowed down. And this coming Thursday, if I'm not wrong, there is the retail sales. Okay, retail sales is going to be forecast at 0.7 negative. Of course, it's better than last month's 1.1. But it may be a drag on the CPI, because when people don't buy, there's no demand, it will be less inflationary. Okay, so what's going to happen is any further evidence of slower price growth will hit the US dollar, right? And that is my view still, because it's not going to change. September, there's no tapering. Whatever people say, okay, because of poor number, they will not even probably talk about tapering. But what they will do, because in September, that means next week, they will talk on the new economic projections. Okay, so the projections may not be as rosy because of Delta, okay? So therefore, any sort of feeling that the market gets that things may slow down a little bit, dollar will get hit. Because why? There will be no tapering so soon. Okay, so to me, the chances of tapering talk at the next week's meeting, all right, is probably not there. Definitely not there. Now, and then also, normally about 10 days or so, between 7 to 10 days before the FOMC meets, there is a blackout period. That means the federal officials cannot talk. Okay, so over the last few days, while the hawks come out, talk so much until give the market that kind of kanchiong, okay? So that's why the dollar is still supported. But over the next 7 to 10 days, they cannot talk. So when they don't talk, the market gets back to its mood and say, hey, employment is bad. Maybe retail sales is going to be bad these few days. So with no hawks to talk it up, I believe, okay, personally, the dollar may be vulnerable to the downside, especially if the data disappoints. Okay, I think my own gut feel is that it will disappoint a little bit, right? Because employment is very important. So when employment gets hit, the rest of the sectors will get hit a little bit. Okay, and Jay Powell will continue to maintain that rising inflation is still transitory. Okay, so any change to that will give the US dollar a pop. All right, but we believe Powell and company will continue to monitor the job situation before changing their tack. All right, it's not so fast. Powell is still a dove, right? And he will remain a dove. So I am still of the opinion probably November is the period. So you have, like I said, 2 months more where dollar will remain weak, okay? Will remain weak. So keep an open mind, all right? Because the dollar index, 92, about 92.50, something 60, is within that midpoint, right? You'll realize that every time it goes to 93, 40, 50, 60, yeah, wow, everybody will look to sell. Every time it goes to 91, 80, 90, everyone will buy. So it's within that midpoint. So don't get too excited, okay, friends? Up and down, 0.5% is very common. So don't kanchiong. Do the day trades that you guys have been doing. I will probably assist you guys as well, okay? And you guys assist me as well, okay? So we work together. Now, this one is very interesting. I think those of you here, I don't know about Wei Yao. I know Dom, I know David, I know Luke, I know myself. We are all short Aussie Kiwi, short Aussie, long Kiwi. So this week you're going to have the New Zealand Q2 GDP and the Australian employment data. All right, both will be due Thursday. New Zealand very early in the morning, and Australia about 9:30 in the morning. Now, the New Zealand GDP is forecast to come in at 1.5% quarter on quarter versus 1.6. A little bit soft, but still there. Nothing to worry about. And of course, it depends on whether how the market want to react. Q2, actually, the COVID hasn't impacted yet. So market, if they want to be bullish, they will say, oh, it's a good number. But if they want to be bearish, dovish, they will say it's not a good number because July to September will be bad. All right. But I am with the RBNZ in the sense that I think they will hike. Okay, if they don't hide and stay too long, there is a problem with them. Okay, eventually. We are also short. Okay, that's good. So all of us short here. All right. So the four of us inside here all short. So the year on year, of course, is a whopping 16.4, which is very, very strong versus 2.4. But on the other hand, okay, Australian employment data is forecast to worsen appreciably with a loss of 70K jobs, okay, versus 2.2K. Right? While the unemployment rate is forecast to edge higher to 4.9 versus 4.6. Okay, previously it was 2.2K plus. So this Thursday, they are expecting 70K negative. Wow, very strong again. So what's going to happen? Even if New Zealand stay where it is, Australia is going to get hit. Right? It may be worse than expected. I don't know. Okay, so there is a greater chance of the Aussie data coming in worse than expected, while the New Zealand data may surprise on the upside, which means we may see lower Aussie US and higher New Zealand US. So of course, this will obviously drag Aussie Kiwi lower. Remember I told you last week, 102, 103 is where you take your profit. It may go lower than 102, but my dear friends, let me tell you this, the last time Aussie Kiwi went down below par. That means one Aussie is 0.9975 Kiwi, I think. Okay, that means Kiwi became very strong. You know what happened? Over the next 2 months, it jumped up 5 to 6% because market is too short. And for those of you trading Aussie and Kiwi against Kiwi, you must know the pattern, and you must know the what you call it, the idiosyncrasies of these two currencies. Because Aussie and Kiwi are so closely related, they are called cousins. Okay, and because Aussie is much bigger than New Zealand, Australia, Aussie Kiwi at parity or below, or even slightly above parity, 101, that kind of level, is very bad for New Zealand. All right, so it cannot stay there for long. So when it comes to 102, folks, please around there, just lock in your profit, stay for a while. I will monitor it for you, because why? Between there and parity, I am looking to buy, and this will be the next move that we're going to see that will give you a lot of meat, 300, 400, 500 points type. All right, to jump from near 101, 102 or near parity to 106, 107 is very easy. Okay, the market will find the excuse. It always happens, always. I use the word always, okay? And I don't say, oh, it may not. It will always happen. It cannot stay too long at that kind of level because it eventually has to go back to equilibrium. All right. So I will also talk that during the October session that I'm going to have. But so far, the response not so good, about 10 people. So if 10 people, I may see how, let's see how. I may just also do it, see how. I'll let you guys know. Okay. All right. Now, because, and you guys know my view, all right, there will be dips here and there, but I guess you guys realize that over the last 1 week or so, 10 days, every time the Kiwi goes to like 70, 80, 90, it bounces back up very fierce. Okay, so that is like a very, very strong support. So it closed on about 71, 10, 15 on Friday. For whatever reason, the thing can slip back down tomorrow morning. You just go and buy for the day trade. Okay, when I'm talking this one, I'm talking about day trade, guys, because we already have so many positions. Okay, if I want to go a bit longer term, I'll tell you guys. So this one take hit and run type. All right, 30 points, about 30, 40 points stop loss, about 70, 80 points take profit. Okay, I think that is a very good trade to do. David, your favorite. I put this in because I knew you would come. Okay, After failing to clear 139 figure, all right, GBP, right? I've been monitoring GBP. I don't like to check GBP. David likes, okay? So, but maybe he has a better feel of it. It is back to close at 38.25.30. Okay. Now the BOE stance is also to the hawkish side. They are itching, okay? Their finger also itching to taper. But you know, sometimes like these Brits, they always wait for the US one, right? To move, then they move, right? So sometimes they have no backbone on the Brits. But I think they are more hawkish than the US. So if you guys want to do sterling, don't trust me on this, okay? But I believe that I did enough to be able to come and tell you this. If there is any dip to about 38 figure, 38.10, you can buy there. The stop loss, very important, must put, okay? 137.60, 65 around there. Okay? Then you take profit about 90 points, 80, 90 points. Stop loss maybe 30, 40 points. Okay, so about 1.1 to 2 ratio. All right, which is not bad. Okay, tomorrow morning I will give you guys more, all right, a little bit more. When I send out the market outlook. Okay, so any questions? I'm done. All right, I'm done because you guys, I'm so used to you guys. Anything on the thing? If not, we can. But because we are on the chat, so you can call me on the chat later. All right, no need to chat on this thing here. Gold. Gold is Bo Sui Lei, David.